It is time for Mr. Sozzi's Take here. You're looking at Wall Street getting bearish on Netflix ahead of earnings, and the shares of the company are down over 40% year to date. A lot of analysts expecting a rough quarter from the company. I mean, I guess the question that I ask when I look at that kind of stock performance is it priced in already if it's down so much?
I'm catching a lot of flack for my take on this from our team. I just want to separate. First of all, it's not. Don't get emotional about it. I love Netflix, the product. I think it works very amazingly. It's very seamless. But just from the stock performance, 1 month, shares of Netflix down 10%, 3 months down 35%, 6 months down 45%. The stock's down 50% from the record high of November last year for a reason. Now, you've seen growth slow. And a lot of folks, we're highlighting a note today from Jefferies' Andrew Urquhart, setting the company's earnings up that are expected after the close tomorrow. The key number is 2.5 million. That's how many net additions they have guided to. Whether they beat that is unclear, but this is a company that has been seeing slowing growth into this quarter. That's why you're seeing the stock under pressure. If they miss that, good luck. The bears are going to come out here and further eviscerate shares.
Well, I guess that's the question, right? If they match estimates, although usually with a company like Netflix, they have to beat, right? It's not good enough just to meet estimates. But when it's down 40% already, I wonder what then the calculation becomes.
And here's my trusty playbook. You can see me watching Netflix on my computer right there. One, do they beat that 2.5 million bogey? The buy side, based on what I've been seeing out there, looking for maybe about 2.4 million net ads, whatever it is. They have to beat that 2.5 million and beat it big. Is Netflix pulling back on content spend? With their growth slowing, I think the street wants to see them pulling back a little bit on original content so they produce better margins. And last but not least, that stock reaction after hours. If Netflix come out here and misses, and to your point, the stock goes up, maybe you could start making the case all this bad news has been priced into shares.
Maybe. And then does Netflix sort of become a bellwether for some of the pandemic plays, right, that soared and now have fallen? At some point, are we going to see a rollover in those stocks and a recovery?
You could, but here's my take. Let's tee it up here. There we go.
Sozzi's Take.
The quarter will probably suck. But, ... And the but is this, and you brought it up very clear. So this will likely be another non-Netflix type quarter where they're seeing that slowing growth. But what is the stock reaction? If you see the stock move up in response to a less than stellar quarter from Netflix, perhaps you could see some bottom fishers come up here and start buying the stock.
What's your favorite thing to watch on Netflix right now?
I was watching President Obama's new wildlife series last night.
Oh, how is that?
It was beautiful. It's so amazing. You see President Obama walking on the beach in the sand. He's wearing like a button-down shirt, and you can see hippos and it wasn't lions, elephants. It was all very exciting. It took me back to my Nat Geo days. I love Nat Geo.
I have been binging the first season of Bridgerton, which is probably not your bag, but it's fun.
Give Obama's wildlife special a chance. It's very visually pleasing and actually very calming,
something I can watch with my children. Bridgerton most definitely is not at all.